Welcome everybody to this week's podcast, and we have a name for our podcast, which is extremely exciting, courtesy of Leith's beautiful wife, Melissa. And we're going to call ourselves the macro and the mortgage because that's what we discuss mostly is what's going on in the general economy, and then we wind that back, of course, to housing. And why do we wind it back to housing? Because land sits at the base of the economy. It is the result of all our economic activity takes place on land. The banks lend predominantly against land as collateral, and it forms the base of the economic cycle. So I think it's a great name. Great, thanks to Melissa for coming up with it. And yes, and what else is exciting about this week is we're joined not only by Leith van Onselen, and my normal partner, but also Dr. Cameron Murray has joined us, and we've done three-way conversations before, and they've always been tremendously informative and actually very popular. We get a lot of viewers when we do a three-way chat like this, and I think that's because well, both of you really are true experts in your field. But Dr. Cameron Murray, we mentioned you last week, Cameron. I said everybody needed to go and follow your Twitter account, or your X account, as it's now called, because you're one of the few people on there that does provide really quality content and interesting information and generates interesting discussions. But your blog, of course, is your Substack is Fresh Economic Thinking, which again is well worth subscribing to. If people on here are subscribers to Macro Business, or you enjoy this channel, you're going to absolutely love Fresh Economic Thinking, because it is full of ideas that you will not get in the mainstream. And again, it breaks down information so that you can understand it. You don't need to go to get an economics degree. If you're watching a channel like this, you can understand all the information. We try and make it understandable so that we can read the economy accurately rather than believing what is told to us in the mainstream media. So welcome, Cameron. How are we doing? You're coming to us from Brisbane.
Yeah, that's right. I just had to put the fan on. Nice warm day here in Brisbane. Um, yeah, probably the nation's most overheated property market as of March 2026, but that's okay.
Yeah, the latest data that came in from Cotality for Brisbane. Did you take a look at it?
No, but I know a lot of my friends and family investing and owning property, so we do all keep a collective close eye on things, and we've been surprised, I think probably for the last 18 months, that things have kept moving in Brisbane. I think we all expected a bit of a peak last year. Didn't quite happen. Maybe we were too early. What was the latest totality data showing?
Leith?
So the latest totality data, Brisbane went up about 1.8% in February. So, and the daily index
Wow.
is still tracking on a 28-day average. So this is Brisbane and Gold Coast
Uh-huh.
combined. So the daily index does both combined, but it's still tracking about 1.5% over 28 days. 1.4 to 1.5%, it sort of swings around there. So it's still running pretty hot. Like if you compare that to Melbourne and Sydney, which are basically zero growth at the moment. I think Melbourne's down like 0.1% over 28 days. Sydney's about zero. You've still got these runaway markets of Brisbane and Perth in particular, but also Adelaide. So those three markets are basically more than doubled since the start of the pandemic if you use PropTrack's data, for example. Whereas, Sydney's been up 46% according to PropTrack, and Melbourne's only up about 22 or 24% since the start of the pandemic. So yeah, those three markets are really on their own. And Brisbane's gone from being, I mentioned it last week, one of the cheapest markets before the pandemic to the second most expensive now. And Melbourne's gone from being the second most expensive start of the pandemic to the cheapest of the five major capitals. So it's totally swung around.
Mm-hmm. And Cameron, I was going to say, I mean, you adherent to the 18-year land cycle, which is what I forecast against. So we would be expecting prices to peak this year, and I really do think that forecast will remain solid. We've already seen clearance rates soften a little bit in Melbourne and Sydney. Now that we've got rate rises priced in, the prices will follow those clearance rates. As the clearance rates come down, prices will follow. So Melbourne and Sydney's market, in my mind, have now passed their peak and are going to start rolling backwards, and that is not going to change until we get through the forecast recession, which is coming up. I'm such a cheery writer I just shoot myself in the foot all the time. Actually, what was interesting this week was a buyer that I was working with. It was a first home buyer, and I was trying to source her a property, and her father's now pulled her out of the property market and said, "Oh no, you can't buy because the war and the rate rises and it's too economically unstable." And if I'm getting that in my little business, then I'm sure that's going to be represented on a little bit of a larger scale. So it's quite interesting. But before we rabbit on about nothing and everything, let's get into the data for this week, Leith, because we can talk about the rate rises because the picture's changed marginally, isn't that right? We're now looking at 3 increases rather than 2.
Yeah. So I'll just quickly share my screen. Can everyone see that?
Yeah.
Yeah. Okay. Yeah. So basically, the financial market. So I think last week they were tipping 2 rate rises this year. So what I mean by the financial markets is the futures. It's a futures market for interest rates, and basically that's what prices the official cash rate every single day. So it's talking hundreds of traders who put their bets in and whatever, and you come up with like an average figure. And now they're tipping, well, very strong chance of a rate hike next week, so in March, and then a follow up in May, which is the next next meeting after that. And if we don't get one next week, then one in May. But they're now tipping a very strong likelihood that we're going to get 3 more rate hikes this year. So 3 more, that's on top of the one in February, obviously. So we're talking a full 1% increase in the cash rate. And if that comes to fruition, and you can see in the chart on the right, I've basically plotted the historical cash rate versus these projections. We'd basically be looking at the highest cash rate in over a decade, and it'd be 4.6%. So it'd be a pretty steep increase, and something that at the end of last year very few people were expecting. There was a couple who was thinking we might get a rate hike or 2, but certainly not 4 over the course of a calendar year. And I got some data on the bottom left, which the same tables I presented last week. I just added an additional one because now it's gone up to 4. Sorry, there's a typo in one of them. It says 31 years. It should say 30. That's how you drag the cell down. But basically for your average size first home buyer mortgage, and a lot of the people who've taken out mortgages now in Australia would actually be higher than that because they would have used the 5% deposit scheme. But this is just the average across the entire mortgage book in the December quarter, according to the ABS. The average first time buyer mortgage was $607,500 in the December quarter. If we got 4 rate hikes, that means that the monthly repayments on that sized mortgage would be $390 extra a month. And for the average total mortgage across the economy in the December quarter, that was $736,000. If we got 4 rate hikes, that adds another $473 per month. If we got 4 rate hikes versus in January before the rates went up. So obviously it's a pretty nasty situation. And obviously the thing that's changed is the war in the Middle East. So we've obviously seen in our capital cities, petrol's now and diesel are now sort of $2.20 to $2.50. Higher in regional areas. There's the Iranian regime has basically promised that they're going to drive the international oil price up to $200 a barrel. I think the highest it's ever been in 2008 was about $145 US. And that'll obviously feed through to higher petrol prices, diesel prices, everything, higher food prices because fertilizers relies on that stuff, higher international gas prices because Qatar is the equal second biggest gas exporter alongside Australia. We basically export about the same. They've now been shut down because they operate through the Straits of Hormuz, which Iran's now sinking oil tankers using suicide boats and things like that, or drone boats. So they've completely seized up transit for 20% of the world's oil supply, as well as they've started attacking neighboring oil countries like Saudi Arabia, etc., with drone attacks, trying to hit their infrastructure. So we're looking at basically a pretty, this war could be prolonged and it could end up being a very strong supply shock on gas and oil markets. And for Australia, that means obviously higher petrol, diesel prices, higher domestic gas prices, because stupidly we don't have a reservation policy that works on the East Coast, and domestic gas prices linked to the international market, which means higher gas prices. And that also means higher electricity prices because gas is one of the marginal price setters in the electricity market. So this has all the hallmarks of a 1970s style energy shock and a stagflation economy, whereby we've got low per capita growth, poor productivity growth, but high inflation, and probably will get higher unemployment. Not yet, because we've got all the government jobs still, but and we could potentially get a CPI, above 5%. So the RBA could be hiking into an economy that is structurally not growing very quickly and is actually structurally pretty weak on the back of this energy shock.
And even, even assuming that the war were to finish quickly, which I don't think it is, and nobody's really forecasting that to happen. These things tend to run out for years once we start them, but those supply chains have now been disrupted and they cannot be rectified. The situation cannot be rectified in a short period of time. So to get the supply back to what it was takes a long period of time as well, which means that the forecast would be for increasing oil prices beyond what we're seeing now. I don't think that the situation is going to rectify very soon. Do you have any opinion on it, Cameron?
No, I guess the only the alternative argument would be the taco argument. Trump always chickens out. And that he sort of retreats with a face-saving story, and Iran sort of consolidates its position and its domestic power base. I mean, I don't really know, but that's the alternative take. In which case, if we might find the inflation shock we're expecting doesn't really happen and all of this unwinds relatively quickly. I mean, the volatility in the last few years has been so high in general. I wouldn't expect a smooth change, if you know what I mean. I'd expect a lot of volatility whichever way it's going, whether the stagflation story is on average the right one or not. I think just volatility is the order of the day.
I mean, the cycle forecast would really sort of liken this to the last peak of the Kondratiev cycle, which was the peak in the 1970s. In fact, we always see sort of oil price spikes when we come up, prior to a recession. We saw it in 2008 as well. So, I mean, I wouldn't expect the situation to resolve. I would think that this inflationary run is not going to put, obviously it's going to put a pressure on costs all through the board. But anybody that is on the margins of the mortgage market is going to find themselves getting very distressed. And we're going to see an increase in distressed sales and perhaps an increase in the foreclosures as well. And that really signifies the end of the property cycle. It signifies that we've got a correction ahead and that we could slip into recession. I fully expect that America will. And if America does, we will follow. But that's the cycle forecast. I find that when forecasting, we look at stuff like this, which is very short term. It's about what we see now. And Cameron, I've heard you talk about this very eloquently, where you've said, the statistics that we're seeing now, you can't just forecast them forever into the future because times change and instances change and everything sort of works in cycles. And that's really the thing that goes on. When we had rate rises that were going on, we didn't expect that we would get rate rises as we did after record low interest rates. And then, of course, when they started to come down, we thought, okay, now we're on a rate cutting cycle. So that's what happens when you read these short-term statistics and they just carry on. But, my forecast based on cyclical analysis, and I do think that cycles override everything. I think they're your long-term forecast that history does repeat, and that we would be looking that we are going into something that we saw, like in the 1970s. And if we head into war and that war does escalate, it might go back to the previous Kondratiev peak, which was World War I. So, yes, be worth taking that into account. What else do we have?
Yeah, so this is a bit more interesting rather than doom and gloom. Like I guess it's still pretty gloomy. It's still pretty gloomy, but at least it's not. It's not this. It's not petrol and your immediate cost of living. But so there was some interesting research that was put out this week by CBA. Now, before I get onto that, I just want to point to some research that came out in the last several months from Jared Minack, who's a really good independent economist. He used to be the chief economist of Morgan Stanley. He now runs Minack Advisors. And in two separate reports, he basically put these two charts on the top left, which I found pretty interesting. And it was basically argued that population growth drives house prices. Now, he wasn't saying that's the absolute driver, but he was talking about more the differential between countries. And on the top left, and he did a scatter plot of population growth versus house price growth across various nations, and Australia's right up there at the top. We've actually had the second strongest population growth in the OECD this century after Israel. And Luxembourg, but that's tiny. Who cares? So that was interesting. And also, but he also in a separate one, he also did he charted population growth versus rental growth. It's also a very strong correlation. And obviously, my chart's on the right. That's Cotality. According to Cotality, our advertised rents have rocketed by 47% since the end of 2019. So far this century, and that's added about $11,600 per year in cost if you take the average advertised rent. So if you rented the average advertised rent home now versus at the end of 2019, you're looking at $11,600 more, $11,500 more to rent that, which is a hell of a hit. And Cotality put out a report recently saying the last 5 years rents have risen 3 times faster than wages. Now, the reason why that's sort of the background, the reason why I talked about it was listeners might remember that last week, and this is for Cam's benefit, you wouldn't have heard, I presented a whole bunch of charts, which I think you retweeted on Twitter, so you know about them, basically saying that the difference between the price growth in Brisbane, Adelaide, Perth versus Sydney and Melbourne could be explained to a large degree by the differences in population growth versus the pre-pandemic trend. So Alex Joyner at IFM Investors put out some crackerjack charts late last year, where he basically said that Perth, particularly Brisbane and Adelaide, have all experienced stronger population growth than the pre-pandemic trend, and they've also experienced higher house price growth. Sydney's basically experienced exactly the same population growth as its pre-pandemic trend, whereas Melbourne has experienced less population growth than its pre-pandemic trend. And that basically matched the differences in the house prices. Now, CBA put out separate research this week in a housing report, which basically confirmed what Alex Joyner had said. And these are the charts that CBA put up. So the chart on the top, the left is obviously a difference in house prices, which is what I presented last week, but with PropTrack data. And then the difference between population growth versus the growth in that dwelling stock. So interestingly, WA, Queensland, South Australia they've deviated significantly from the pre-pandemic trend, whereas New South Wales is marginally below and Victoria significantly below. And that matches the differences in house prices. So this gets back to the same story. And they also put an interesting chart, which is the one on the right, which basically is the ratio of population change to high density dwelling completions. And they used high density because 80% of high density dwellings in Australia are rented, apparently, versus only like 25% or something of detached stock. And it's a similar story. Basically, when population growth goes up, other things equal, rents go up. And when population growth falls, rents fall. And in population growth, you can substitute immigration because immigration is the driver. So I just thought this was very, very interesting. And as a counterpoint to this is my final thing. So Australia's obviously experiencing a pretty nasty rental crisis, especially if you go by the Cotality data. Again, 47% increase since the end of 2019. We've had huge population growth, highest in the nation's history, averaged 266,000 net overseas migration a year since the end of 2019. We've never experienced immigration like that before. That includes the border closures. So it's the highest in the nation's history. And we've had a rental crisis. Now, Canada, I've mentioned this before, but I've got some new data here. The chart on the left was taken from the National Bank of Canada in about January or February 2024. So I remember I ripped that chart out of one of their reports. And what it showed is at the time, Canada had experienced the biggest immigration boom in its history, and rents had just absolutely rocketed in Canada. So that chart on the left-hand side is from early 2024. The difference between Canada and Australia is that Canada recognized that it stuffed up, right? It recognized that it run immigration too hard. It created a rental crisis. It was crush-laden infrastructure, creating a whole bunch of problems. Canadians were severely unhappy by the situation. They didn't like it. And basically the opposition party at the time had called for lower immigration, and the government was facing electoral annihilation. So what it did was it basically implemented massive cuts to temporary migration. So it basically wants to reduce the share of temporary migrants in Canada from a peak of 7.6% of the population to 5% by 2027. It's also cut the permanent migrant intake. And these immigration curves have worked, right? Because Canada's annual population growth has basically slowed to zero, and it actually had a population decline of 76,000 in the September quarter of last year, which is its first decline outside the pandemic since about World War II. Now, this decline in population growth, i.e. immigration, has had a profound impact on Canada's rental market. So you can see all the charts on the left-hand side. These are all released this week by Rentals Canada. I presented similar charts previously, but this is the latest iteration for February. And it shows that Canadian rents have fallen for 17 consecutive months since they cut immigration. They're now tracking at a 33-month low. They're down about 7.5% from their peak. And they're now saving the typical Canadian $172 per month to rent versus what they were at the May 2024 peak. And the percentage of income now, so in Australia, rental affordability, according to Cotality, has never been worse. So the share of income spent on rents is higher now in Australia than ever before. It's like 34%. Canada's share of rental affordability has actually improved. So it peaked at 34%, which was its worst level in May 2024. And now, or 2 years ago, and now it's fallen to 29%. That's the chart on the bottom right-hand side. So Canada is basically in the process of solving its rental crisis by simply cutting immigration. Yet we've got the clowns in Australia who are trying to present this as purely a supply issue. So you get all the clowns at the CIS and Grattan and all these other places. They're all clowns. They're all saying it's a supply issue. Forget about demand. Don't worry. Migration has nothing to do with it. It's all supply. Yet we've got a controlled experiment over in Canada, which I argue is Australia's most similar country. It's more similar than New Zealand, like in its structure and everything, the way the economy is structured, commodity exporter, that sort of thing. Canada has literally gone from its worst rental crisis in history to being in the process of solving its rental crisis, having massively improved rental affordability, 17 consecutive months of falling rents, a 7.5% decline in rents from its peak, simply by cutting immigration. So the federal government in Australia's own housing advisory, which is the National Housing Supply and Affordability Council, they forecast that over the 5 years of 2028, 29, every single year of that 5-year period, which is the government's housing accord period, Australia will not build enough homes to keep up with population growth, and will experience a cumulative shortage of 79,000 homes over the period, which could be up to 200,000 if immigration runs stronger than the government forecasts. Now, in their sensitivity analysis, they also found that if we merely slowed population growth by 15% less than what Treasury forecasts, instead of having a 79,000 shortage of homes, we'd have a surplus of 40,000 homes. So the government's own advisory council has implicitly said through their modelling that if we simply slow population growth, we'll get more homes. So we'll solve the cumulative shortage of homes, and we'll therefore improve the rental crisis. So here's my question. Why the hell isn't the Australian government looking at Canada and going, hang on, we've got a rental crisis. We've got this, we can't build enough homes. We can't build enough infrastructure. And Australians want lower immigration. Maybe we should give them lower immigration. Because that, if you follow...
Oh, Leith, your mic is gone.
But
oh, you're back.
Sorry.
You're not.
I'm back on? Yeah, sorry. Yeah. I got a little bit excited. I hit my mic. So why is it that our clowns in government won't simply just copy Canada? We've got a controlled experiment here where Canada's done X, we're continuing to do Y. Canada's having good results, we're continuing to have poor results. It just seems like a no-brainer.
It's the answer's simple, because housing affordability isn't top of the agenda, because all of their policies to combat housing affordability are policies to actually make it more expensive. I mean, it's interesting what you said. I mean, because if you get falling rents, you're going to have falling prices, right? If you get falling prices, then people that are very over leveraged in the banking system then starts to be, at higher risk, because the funds that have been loaned out, the collateral drops below the funds that have been loaned out, So, I mean, that's essentially what happens at the end of the cycle to cause a financial crisis or cause a banking crisis. The collaterals, is no longer underpinning the funds that have been lent out. But I did think it was interesting where you said 80% of high density accommodation is rented. It's also the reason that anybody watching this who does invest in property shouldn't invest in apartments if they're looking for capital growth, because there is only really one demographic of buyer of apartments. You know, you might have some first home buyers, although a lot of first home buyers actually don't buy apartments because they purchase when they've formed a couple, and then a small 1 or 2 bedroom apartment usually doesn't cut it. But investors wax and wane with the business cycle, and there's only a small demographic that live in apartments. If you really want to generate capital growth, then you need to purchase a property that's going to attract a broad buyer demographic. So investors and families with kids, our biggest buying demographic actually are families with kids. So couples thinking about having children or families with children, a property that appeals to that demographic, you're doing very well if you want an on sale value. So that would be a 3-bedder suburban property, single level, half block, suburban property on a subdividable block of land. Anyway, I won't go into a property investment seminar, but any comments on that, Cameron?
Yeah, I'll just pick up on a few things. I guess the answer to your question, Leith, why isn't the government doing anything? Because won't we think of the landlords who are now Canadian landlords giving up $2,000 a year in rent, so that renters can have lower accommodation costs? So, you know, there's a genuine tension, economic tension amongst different groups in society when it comes to housing. And in my book, The Great Housing Hijack, I call it the symmetry of property markets, right? The tenant's rent is someone else's income, and those other people also vote. And we have, you know, 1.8 million households who are landlords in this country, and they're generally very well politically connected. So they don't really care what people want, if they want lower immigration, etc. It's only when their power is put at risk at the ballot box that they might change. And we've seen that internationally in Denmark, where the left political party decided to get tough on borders because it didn't want to lose the election. We've seen it in Canada, and perhaps we will see it in Australia if One Nation continues to rise in the polls over the rest of this year. So there's that. I guess the other response would be just be wary of housing shortage forecasts from government departments.
Oh, yeah.
I mean, the logic of what they say is correct, like internally consistent with how they do their assessments. But, you know, we had pretty high population growth in the second half of the 2010s, and had, you know, the rental component of CPI was a drag on the rest, right? We had a big boom despite the population growth. So I think you've got to think about these effects of population as short-term adjustment effects, just like when, you know, the analogy I use is a town gets flooded and all the houses are destroyed. Well, now we've got this mismatch between how many homes we thought and how many people we had. And it takes a while for the market to adjust. And at the national level, it takes, you know, 4 or 5 or 6 years to adjust. But eventually we'd get there. So Canada, yes, was in that upwards adjustment to that population shock, and now they're in the downwards adjustment. But I suspect if we zoom out to 10 or 15 years in the future, everyone will still complain about the price of housing because we'll be in the next upswing. So always good to have the long-term perspective as well.
Can I just add something to that quickly? Yeah. So yeah, to your point, so between 2015 to 2020, we did have falling real rents. And we did have also construction boom then. So we had the highest dwelling construction in the nation's history. It was all that high-rise garbage. Like, a lot of it wasn't very good, but it was definitely good for the rental market. And that definitely did help to offset the high immigration we had, which isn't as high as we've had recently. But the difference is, though, now we are supply constrained. So we've got, back then the cash rate was 1.5%. It's now going to, well, if you go by the forecast, go to 4.6%. So it costs more the construction costs have gone up 40% since the pandemic. So it costs way more to build stuff. We've obviously got you know, labor shortages in the construction industry and whatever, partly because the construction industry is also trying to build a whole bunch of infrastructure to keep up with the population Ponzi. All the big build infrastructure projects, got all the energy projects and all this other stuff. And obviously, of course, the price of land for housing has soared by another third since the start of the pandemic. So the supply side of the equation of the housing market's actually is more constricted than it was then, at the same time as we're running this very high population growth policy. So it's just a recipe for higher rents, or structurally higher rents, unfortunately.
Yeah,
Yeah.
I suspect it'll all come together at the same time. I think the political change, the One Nation surge, if it continues, and actual change about migration policy will come at the same time as, um, rents are peaking and prices are peaking in the next cycle as well. So it's going to be very interesting for sure.
Yeah, I mean, I think whenever you get a downturn, it changes migration patterns. I think I mentioned in the last podcast that we did, when we had the 1990s downturn, which hit Melbourne very badly, we saw a huge exodus of people um, move from the city, and that sort of extended the downturn. Prices didn't really turn until 1997 in Melbourne, and then they began their sort of upward run. We skimmed across the 2001 recession that hit the US, the dot-com bubble and bust, and roared then into 2007, and then we hit our next crisis in 2008. But yeah, it's interesting also what you say, Cam, because it reminds me of the archival footage that comes out. You see it on Instagram reels every now and again from the ABC, where they go back to the 1960s and they interview some poor couple that could be interviewed today, that they say, you can't afford the house, we can't afford a house, and first home buyers are priced out now.
Yeah.
It's just a rinse and repeat of we could have housing affordability consistently in the newspapers, because the system is set up to ensure that housing is unaffordable.
Hey, I've got a quick question for Cam, because last week I ran a bit where I basically argued that we could soon start seeing.
Is this your last slide, Leith?
No. Actually, I don't. Sorry, I should actually get. I'll get out of the slideshow because I'm done.
Okay.
So, but I was going to say, last week I ran a bit about how Queenslanders are going to start fleeing to Melbourne soon for affordable housing, and it was based on the fact that again, Melbourne's gone from being second most expensive start of the pandemic to the cheapest, and Brisbane and Gold Coast, etc., have gone from being the very cheap comparatively to very expensive. So, have you? Because you're a Queenslander, right? So you're coming from Queensland. Yeah. Have you spoken to anybody, or have you heard anyone going, you know what? I'm going to move to Melbourne because it's cheap?
People have said, I don't think I'm going to buy a house in Brisbane right now. And with the conversations has gone to, but we might buy one in Melbourne. So the sort of savvy investor groups that I talk to definitely think the market's overpriced and would take their money to another city. Will people actually relocate? I don't know many sort of refugees from Victoria in Brisbane in my networks, but I suspect a few of them have probably thought, well, actually, I can cash out of Brisbane now, buy back in Victoria, and be close to the family now that I've got these kids and I can get in the nice school catchment, and all my old friends are there. So I suspect that's a possibility. I don't think we've seen anything in the data yet, but of course, the data will only show it once it's already happening, and it's a little bit too late.
Actually, so I presented some data last week, but it's all for June 30 last year, because obviously the migration data is super, but actually showed that Victoria for the first time so not Melbourne, but Victoria for the first time since the pandemic had 2 consecutive quarters of net inflow. And Brisbane's inflow from other states was still positive, but it's actually fallen quite sharply. So it suggests that maybe there is starting to at least maybe be some Queenslanders coming north, or at least Queenslanders coming south to Mexico, and some of us Victorian Mexicans not going north to Queensland anymore. So anyway, but it's early days, and the data's so old anyway. It's like nearly 9 months old.
That's right. Well, I suspect places like the Golden Sunshine Coast have historically had huge boom and busts, in prices and through migration flows. And I don't think there's a reason to think this time's going to be any different, and we'll somehow miss the bust. The question's just when. Is it going to ramp up during 2026, or are we going to see another year before anything noticeable changes? But yeah, the relative pricing in Brisbane is just, compared to Melbourne, absolutely almost record highs for the last 20 years. It's never been a better deal to sell your house in Brisbane and buy one in Melbourne. From the data here from the early 2000s boom to now. So, it's something I'm considering. I look at realestate.com in Melbourne and think, gee, that's a pretty decent house for $1 million, $1.5 million. In Brisbane, you're getting not very much, honestly.
It's hilarious, isn't it? 5 years ago, we would have been having the opposite.
Yeah, to give
Yeah.
a case study, I was talking to somebody yesterday who was looking at he's actually close to retirement, and he was asking me whether he should buy in Surfers Paradise. And one of the apartments that he'd been looking at in 2019, he could have purchased for 600,000. And he went to buy a property in the same block. He went to look at a property that was in the same block, same kind of size apartment, and they knocked back 2 million on it. And I don't think anybody really registers how unbelievable that boom has been in that area of Australia. I mean, that to me is just mind blowing. And the advice has to be, don't do it right now. If you do it right now, you have to acknowledge that you're buying really at the very peak of the cycle. That type of price run just can't continue indefinitely.
Yeah, no, I mean, that's the conversations pre-COVID I was having in Brisbane was, gee, now's a really good time to buy. Nominal prices had done nothing really for 10 years. And now the conversation is, well, it's probably a good time to sell in Brisbane. And I think that's, if you acknowledge the cycle and the change in the relative valuations of different cities, that's just what it shows. Not that I'm telling anyone what to do. If you want to live in Brisbane, do it. But I wouldn't have high expectations that you're going to catch another boom like we've seen. You should be very prepared for the opposite.
And bear in mind that the boom that we've seen was really stimulated by a once in 100-year event, which was the pandemic, which caused these incredible migration cycles into the regional areas and cities away from Melbourne and Sydney that had been hit worse by that downturn. So that type of turnaround, again, it's all based on population growth, which is the push for everything else to happen in that gentrification cycle that plays out in the land cycle, plays out in the boom and bust real estate cycle. But one of the things we did want to discuss with you today, Cam, was the tremendous research that you've done over the years on planning and zoning and how that actually impacts property supply, because this is such a, even now, I think it's because I'm so familiar with your research, and I'm sure Leith is as well. The conversations about if we could just build more, and then the solution to building more, rezoning swathes of land, expecting that building activity is therefore going to take place. And we have a prime example in Melbourne, because the Jacinta Allen has rezoned swathes of land into activity zones. We are supposedly going to be the townhouse capital of Australia. And it's not pleased anybody that's in those areas, because the last thing that home buyers want to experience is high-rise accommodation, high-density accommodation next to where they live. So we have a lot of YIMBY moaning going on at the moment around those areas, and rightly so. The accommodation isn't quality accommodation. But do you want to sort of go into a little bit of perhaps some of the latest stuff that you've been looking at in regard to that?
Yeah, I'm hoping you guys can't hear this truck reversing down
I can hear it.
It's not that bad. Don't worry about it.
I've been trying to mute my microphone, and I don't know how to. We need more planning rules about beeping trucks in residential streets. No, not much we can do except go and yell at that person. But yeah, I mean, this is an ongoing thing. I remember back, I was working for property developers. I don't know if people know, but I tried selling real estate back in 2002 in Queensland during the last boom. And the story then was the same. Oh, zoning and planning, let me do some dodgy, cheap build that doesn't meet the planning requirements. And the stories that we told were just absolute nonsense, because I remember I was the one who, the junior guy who had all these spreadsheets doing feasibilities and just churning data and helping everyone out. And I never, put the prices down in my spreadsheet because our area got upzoned, right? I never did. I just added extra apartments into our building. So no one really believed it then. And I think we all acknowledged that, there's a game afoot of trying to push and bend the rules. And, it's totally legitimate to upgrade planning and zoning rules regularly. And that's planners call that strategic planning, where we go and check, is this getting what we want? What's happened since the last time we reviewed it? But yeah, it's somehow today become just this all-pervasive social movement. And yet, you look at somewhere like Canada, Toronto or Vancouver, where that was the predominant story during COVID, right? The prices in Toronto are up, the rents are up because of town planning. And now they've been falling, as Leith said, for 18 months. Prices are down. And the biggest problem they have now is prices are going down, not up, right? That's become the new political problem. So I just, we've talked about this for hundreds of years. You can go on Trove if you feel like it. Look up zoning, housing supply, and you'll find the same arguments in the 70s. You'll find it all the whole post-war period. And what's really funny is that in the pre-war period, planning was like the great savior of the cities because there were so many slums everywhere. And the big government push then was, we need some bloody rules about the city because everyone's dying from diseases and we don't like the poor people spreading diseases to the rich people in our cities. So we need rules to clean it up and get all the horses away from the people and all the other animals and all the industrial pollutants. And it was the great big savior of the city back then. So it's just this odd debate. And it's so detached from the actual process of planning. I've had the experience of talking to YIMBY people and saying, well, what rules should we have? I mean, do you want no rules? What about this conflict? What if I just build this beautiful house with my solar panels and next door builds 10 stories and I can't get any sun and I've got these great big windows looking into their bathrooms? Like, is that okay? How do you want us to bargain? Am I supposed to pay them to not do that? How do you want us to work that out? And they go, oh, that wouldn't happen, because those apartments would be somewhere else. They'd all be near the train station. I'm like, okay, what if I'm near the train station? Like, it's a reason rules exist is because this stuff happens all the time. And we can't just bargain every single development. And so, I interviewed a town planner, Tim Sneesby, a mate of mine, on my podcast at Fresh Economic Thinking. It was awesome,
Thinking. By the way. Go and watch it.
Great. And I just said, what do planners do? How does it work? Do you have a quota where you tell people, there's too many houses now, go away? And it doesn't really do any of that. It just says, we want more of this here, and we're going to do the public investment in this area. And if you can make the case to go taller or to have an extra driveway when we say you can't have two driveways across the footpath, or you make the case that this design's going to get what you want, you can generally do it. You just have to do that review process and not just say, it's cheap for me, it's going to be good, therefore I can do it. So I've spoken to a lot of people who say, the rules should allow flexibility. So if you don't meet the setback or the height, you can still do what they want outside the rules. And I go, yes, they should do that. That's exactly how they work. It's almost like an admission. I don't know how the rules work or how they're applied. And the planners call it performance-based planning. So basically they say these areas should achieve these outcomes. The streets should look like that. We should minimize vehicle crossings of footpaths for safety, or, we should avoid overlooking of certain things. And they have a set of codes that say, if you do this, we'll assume you've met that, right? This is the way we've tried to codify what we want. But if you don't meet the code, you can explain to us how you're achieving what we want by having frosted windows that overlook, so you can't see your neighbors on the toilet all the time, or whatever the case may be. And it just sort of bends their minds when they go, is that what the rules are doing exactly what I proposed the rules should do, but I still want to blame the rules. So yeah, that's I've been talking about this for 25 years. I first studied town planning, I think in 2002 or 3, and all the same conversations were happening. And in fact, when I do a lot of economics training for town planners, which people think is also, the town planners interfere and they don't know economics. Well, they're trying. They come to my training. And a lot of them think their business is to make houses get built. They don't think they're there to prevent houses. They're like, we really want this. We just don't want any old thing. It's got to fit with the what the community wants. And isn't it appropriate to have someone to make sure that happens? So I think there's a lot of outdated planning rules. I think there's probably some very bad councils who waste a lot of time and dick around people and don't have good processes. And I definitely think that should change. But I heard, for example, from some planners in Brisbane, we still do. We have a system called some planner in Brisbane can remind me, but essentially, if you had a project below a certain scale and you complied with the codes, you'd get a decision in 5 business days, right? This was just a streamline, pick the easy way. You keep complaining about how long it takes. And it started quite popular. People would use it. But now hardly anyone uses it because they don't want to comply with the codes. They want to go, hey, we can meet your desired outcomes doing something a little bit different. We won't have a big setback here, but we'll give you a bit of extra street space to plant some trees there because that's the outcome you want. And so they want to engage in the bargain because they want to control the flexibility of their design, knowing that there's someone there at the table looking after the public interest. And, and if there's not someone there at the table, you get some really dodgy stuff. Like I've heard people go, oh, I want to build a 3-meter tall concrete wall with no openings on my boundary on the footpath. And I just want to block out this giant wall in this really nice street. And the planners are like, oh, does that really comply? And that's what they want to do. So someone has to sort of sit there and do the job. So I think there's a reason every city has evolved some kind of planning system to coordinate this stuff. And in cities that get told or claim to be, that claim to be free markets that lack planning, like the infamous Houston, Texas, instead of councils enacting planning, private property developers impose covenants, which are very, very strict rules on their own subdivisions, right? They're like, well, if you're not going to make sure this doesn't turn to crap in the future, we'll have to create rules ourselves. And if you look in Australia at the major, master plan subdivisions, everyone's got a covenant. They will tell you what color your letterbox can be, right? This is what people want. And if the council doesn't do it, someone else will. So I guess that's my long rant. And if we zoom out, every cycle, everyone wants to say, oh, the market would always be the right price. So it must be some meddling regulation, right? And every cycle, the price goes up and down. And we don't credit planning when prices fall. We just blame it when it goes up. And I just think this linking this system of rules to pricing is just a big mistake. We should argue the shape we want our cities to be and how we coordinate on the own local merits of each rule. But the idea that it's somehow the reason prices are expensive in Sydney because of a nasty council, well, you have to explain all the other cities around the world that have become expensive as well. Is it just we all magically during this cycle created really bad planning rules all at the same time? I just don't buy it.
Hey, can I ask you some questions about that interview? So I watched it. It was awesome. And 2 things struck out to me. So first of all, Tim, I think his name was, the planner. He mentioned, because he works in New South Wales, I believe. Is that right? Is it New South Wales? Yeah. So he's a New South Wales planner. And he mentioned there was some stat, and you'll remember it better than me, but he said something like 94% or something of development applications that go through get approved.
Correct.
Or maybe it was 96 or something, but it was some really high.
It's in the 90s, even in Greater Sydney.
Yeah, so it's like, well, hang on, where's the bottleneck there? If they're approving 94%, and the other thing that was even more interesting, and you'll be able to explain this better than me, but just because a development approval does not end up being a dwelling approval, right? So development approvals end up usually way higher, and they do a lot more development approvals than actually end up becoming building approvals, which is another thing. So you've got all these people who are going up getting their approvals for development approvals, but then they're not necessarily proceeding on to building. So it's like, well, where's the bottleneck there then?
Correct. So the ABS releases a thing called building approvals, right? And we track them. these building approvals are not issued by planning authorities or councils, right? They're compliance for builders to make sure the designs meet the construction code, that what they've built is not going to fall down and meets all the construction minimums. Many years before this, there is a process with the council to decide if you can get a development approval, which basically says, is the type of thing you want to do, the bulk scale design, all these interactions with other lots and the public realm, does that meet these performance, outcomes we want? If so, you can get it approved. And between those two times, between getting the development approval and getting the building approval, people do their market research. They try and pre-sell. They try and, maybe bulk sell some stuff. They try and get their construction contracts, bid down. They test the market, right? There can be many, many years between that. And you know what? If that proposal or that development with a whole bunch of one-bedders starts looking like a bad return because construction costs have gone up, right? And the market's very thin and no one wants to pay, you might just get another development approval and say, hey, now instead of that, can I do 50 luxury, one apartment per floor instead? And then you'll go and try and sell that because you've got the approval there. You've de-risked it. You go and sell that. And if it doesn't work, you might get another one. And this might go on for 20 years. There's a site, I can just about see it outside my window. They got an approval in 2015, I think, for 6 short towers. And then it got another approval in like 2019. And then it's applied for another approval in 2025. And they just keep changing the design and go, should I do more towers? Should I do this? Would you approve that if I gave you some park space, in the corner of my property? And I'm like, are they ever going to build it? Like, it sounds like they don't even want to build it, right? And so we haven't actually had good planning approvals data for years. New South Wales just required councils to use their centralised planning application submission system where you can actually track it now. And what you find is that development applications per year, I think there's a chart on Fresh Economic Thinking. I've got an article called Building Approvals and Not Planning Approvals or something like that. I read that,
yep.
In the recent data, let me find the number here, New South Wales, the development approvals were twice as high as the building approvals.
Yeah. So my question is, where's the
buffer stock?
Where's the bottleneck?
The bottleneck. Well, the bottleneck's the market, right?
Yeah.
So in Queensland, we do have this data, and so the approved that stock of apartments that's got a dwelling, a planning approval, but hasn't started construction, can supply 21 years of new apartments in southeast Queensland right now, right? That's how many, what's the number here? 120,000 we have in this bucket waiting to be built. The constraint is the market, right?
Yeah.
You don't just flood the market because you can. And people think, why is this different from other? You're telling me the economics is different for houses? I'm saying the economics is the same, but when you have big, large, lumpy capital investments, it's very different from bananas where you're going to grow more next year. And so you've got to get rid of everything you've got this year before the next one comes on. Think about cruise ships. I'm geared up to build 3 cruise ships a year. Great. Do I just build them because my facility can do 3? Or do I only build them once someone's made an order for it? Well, I only build it when it's ordered. And so the same is true for housing. It's sort of build to order. And so we have this huge buffer stock so that when there is a boom, guess what? Suddenly all these projects start getting built that already had planning approvals. So it's, I think there's a bit of a misunderstanding there. I would say the majority of people in the debate think that building approvals are planning approvals issued by councils, and that is somehow regulating or limiting the pace of new homes. But I assure you, the next cycle, we're going to have a massive construction boom again. And, planning's not going to be in the way. There's plenty of interested property owners with big sites ready to go when people are going to show up and pay top dollar for it.
Can I just add something else to the debate? So obviously So in Victoria and New South Wales, talking about this, blanket zoning, upzoning, all this sort of stuff, right? And that's supposed to be the big solution. The problem is we are speed limited by construction costs. We're speed limited by the number of home builders that can actually build this stuff. We're speed limited by the capacity of buyers to pay. All this sort of stuff. So just because you've blanket zone all these places, so suddenly theoretically Melbourne can now build, I don't know, 300,000. Well, I'm picking this number obviously out of my backside, but theoretically, given what we're upzoned, we could potentially build hundreds of thousands of dwellings a year. We're not going to do it because we don't have the supply capacity to deliver that. So what's it actually going to do?
It just changes the shape of where those projects get pulled from when the time comes. So
and what they look like.
Yeah, you can imagine everyone's competing in that market for different sites and different types of dwellings, and that's fine. But that process itself leads to an optimal rate per period, right? Through trial and error and all that competition. And that's been known, the YIMBYs tell me my economics is wrong. And then I send them these old articles from like the 1930s that literally explain this from Nobel Prize winning economists. And then they just change their mind and tell me some other story. So yeah, you don't build tomorrow's houses today, you build today's today. And there is a rate, and the market, forces do regulate the pace. And when there's a crash, you build less. When it's booming, you build more. And that's what we see. That's why this prices and construction go in cycles. It's not that suddenly we remove planning and we get a construction boom, and suddenly we tighten it up and we get a bust.
Yeah, and the other thing is, they always point to Auckland as being this beacon of planning bliss, right? But I've looked at the data. You've looked at the data. Auckland's rents has risen pretty much the same rate as everywhere else. Now they say, Auckland changed their planning in 2016 and it had less rental growth over the next decade, but it also had a massive run up before that. During the pandemic, Auckland lost people, a bit like Melbourne, so that obviously had an impact. But if you actually look at it over a longer term, it's just cycles. It makes no difference. And same with price. But then my counterpoint to them is always, okay, then you want to point to Auckland. How about we point to Vancouver? So Vancouver is basically 75% of its construction is high rise. Now it's high density. It has completely transformed its city in about 30 or 40 years from being low rise to just blanket high rise everywhere. It looks very much like Hong Kong, especially in the central area. Yet Vancouver has the most expensive house prices and the most expensive rents in North America. So I'm like, well, if this is a solution and you can build high rise anywhere in Vancouver and they've done it, well, then how's that a model of housing affordability when it has literally the most expensive rents, the most expensive house prices in North America? Like, none of this makes sense.
No, I mean, you build high rises in high value places, right? You don't build them in low value places. And in fact, what's really interesting about town planning is, we really focus on the name brand trendy suburbs of the major cities and ignore the rest of the country. And there is a real status game behind it all, because I know if you go to Beenleigh or Logan or Ipswich, there's hundreds and hundreds of years worth of houses you could build today. But no one wants to go there. They just want the place that they think reflects their status to be affordable to them. And they hate it when someone else who doesn't have their status seems to be able to buy in the nice suburb. And I get it. I mean, that happens every cycle, but the cities have changed. Our lifestyles have changed. There are people who have, for example, not worked until they're 25 years old full time, competing with people who started a trade at 15 and have been running their own business for 8 years. And so, yeah, all of that's happening at the same time. And yeah, for much of the country, they're trying to encourage density and more supply through the planning system. There's a great case in my book in Victoria where the council says, we want townhouses because there's a new train station coming, right? So this area's, and the property owner said, I don't want to build townhouses, I want to build detached houses because people won't pay me enough in this area to justify townhouses. So can I please do detached houses instead? I want to build fewer homes than what you want. And so they had the argument, then the YIMBYs think everyone wants to just build a high rise everywhere. No, this property owner said that at this market price and these construction costs, I want to build detached. It's better for me. I want fewer homes. That makes me more money. So it's much more complicated than you get from Twitter or from the mainstream media.
or
And
from the Centre
having
for
worked,
Independent Studies?
I just want to say I've worked with developers for many, many years, and a lot of my clients have been, doing feasibilities for them, seeing whether the land actually stacks up for what they want to develop. I had heaps and heaps of developer clients leading into, through 2012 to 2017, there was a building boom that was going on. I don't know whether you remember it, but all I was writing about at that time was the crane index. Well, it wasn't all I was writing about, but it was one of the big things because they had this, the amount of cranes that you could see on the skyline was this supposed to be this representation of the economic activity in the city. And then, of course, the Royal Commission came in and it tightened up on finance and developers couldn't borrow anything. And then, of course, we had COVID that came in, which just rocketed building costs and inflation went up and then interest rates went up and nothing was feasible for. I'm talking about the smaller developers, right? Because we had the home buyer, home builder thing that came through in COVID, which obviously assisted the bigger developers that were out in the new estates. So developers have been largely absent from the market. But the ones that I've dealt with, and when I've sat with developer clients and I've gone through the entire process, I mean, it typically does take 3 times as long to get planning permission and to get all your plans and permits approved than it does to actually build the house at the other end of it. So there is a sort of council thing that happens. It varies between councils, it varies between design, but none of those developers are going to build a scrap unless it makes economic sense. And you can't automatically pass those costs on. You can't say, okay, because I'm being charged more by council, I'm therefore going to add that onto the sale price of my property because there's a market out there and your feasibility is done on what townhouses are selling for today and what you hope to happen when you do that feasibility. So you do a feasibility, you see a block of land, you do a feasibility, you try and work out what the end value is of what you've built, and then does it all stack up and are you going to get enough profit to be able to borrow what you need to borrow? And then you hope that the market doesn't shift in that 12 months to get planning approval and then 6 months to do the build, or it can be even more than that. If it's a complicated project, it can stretch out because then you're doing this back and forth with going through VCAT and can I do this and can I squeeze another property on and you won't let me do this, so can I put a 1 bedroom here and then does that stack up? All of that costs money because all of that is time, and paying architects and paying designers to put that together. There's also instances where councils change zoning midway through. I mean, that has happened to clients. They've bought a block of land and it's been something that they can build an apartment block on, and then suddenly the zoning is changed and to lower density zoning. And what they paid for the land now doesn't stack up because the land value is not only based on its location, it's based on what you can build on it. You can have the skinniest block of land in Melbourne. In fact, I think there was back in, this would have been maybe 2019, there was a competition for this skinny block of land in Melbourne as to what they were going to do with it. I think it was the Royal Historical Society that put out this competition. And the winner was someone who said, I'm going to build this skinny skyscraper. And they started to go through the whole process of it. But it was a tiny block of land that was obviously worth so much because it had zoning potential to build a high rise on it. So it's a complicated system and it just can't marginally shift prices anyway because of all of that process you have to go through to actually work out whether you're going to take on the risk. Because if you get halfway through a project and your costs blow out, you are going bust. That I've worked with many developers that when that Royal Commission happened and they cut off finance, that they had built a project then that they suddenly couldn't sell, and they were looking at losing their business because of it.
Yeah, so you're right that when the zoning changes during a project, you might lose your opportunity and lose the value, but that also happens in the opposite way quite often. You buy something, you think you can build 3 townhouses, then you can suddenly build a 12 apartment block. And so, I've always been a big fan of charging for that extra value when we change the rules in your favor. And what's really interesting is that in Queensland, you can get upzoned and that's free. Off you go and make more money, cash in, or just sell it to someone else and take the value. But if you get downzoned, you can actually seek compensation for the decline in land value from the state government. So we've got this sort of an asymmetric outcome. I'd rather do it both ways. And, you can seek compensation if you get downzoned, but you better pay for it if you get upzoned and your, $3 million block suddenly worth $10 million. I think we should share that windfall with the community. So yeah, there's just so many games in the town planning system because the rules change what the value of people's property is. And so arguing about the rules is one way you can invest in changing the value of your property, just like building houses is one way you can invest to change the value of your property. So people like to do both. They like to argue about the rules and sometimes build houses.
My advice to anyone that's thinking of doing this is to go for the simple project. If you're not experienced, go for the one where you can put a dwelling behind your existing home. Yes, easily subdivide the block. Do something like that because that will get you places where you'll go into these bigger projects thinking because when you find something that you can build, something that's put 3 townhouses on, for example, sure, the profit is bigger and you can do the feasibility and you think, okay, I need to buy the land for this price and it's all going to stack up, but the process of going through it is incredibly stressful, and unseen things and unseen costs are always there in development. It's not a stress-free process to undertake. But we are now, and I think we've gone over the hour. Not sure, can't see where my timer is, but so we probably should wind up for this week. Thank you so much, Cameron, for joining us. What do you want to plug aside from your website? Anything else you want to talk about what you're doing? And again, I must encourage everybody. Cam has been one of the most educative people that I have known in my years in the real estate industry. I've learned so much from Cameron. He's extremely intelligent, has got some excellent research out there, and you must go to his Fresh Economic Thinking Substack, subscribe to it.
And his YouTube.
Yeah, and his
Thanks. Yeah, got it all.
And his Twitter. He's got so many followers on Twitter.
So many plugs. Yeah. Thanks, Catherine. I'll sort you out for that lovely plug later. Now, the main thing is I've got a workshop coming up in June, 9th and 10th in Brisbane, called Land and Housing Economics, which is like a 2-day intensive in-person workshop just to nut through all of the issues about why are there cycles, where do asset prices come from, why do rents go up and down. Can we, get more density, or is there a market constraint? All those tricky questions. I've developed a really nice hands-on workshop to get through all that. So if you go to Fresh Economic Thinking, click on Speaking and Courses, you'll see the Eventbrite and the flyer at the top of the page.
And you are an extremely good lecturer, because do you still travel overseas to Jeddah?
Teach the MBA class at Mohammed bin Salman College in Saudi Arabia. I hope all my lovely students are doing okay.
I want an update on the world's tall list, which they started to reconstruct. The reason I get so excited about this is because the world's tallest building opening is always timed in a recession. So it's quite an extraordinary index. But of course, the new world's tallest is occurring in Jeddah, the Kingdom Tower. And it was due to open in 2020, which would have been in a recession. So it was very well timed. And now it is due to open in 2028, which will be another recession. You can record me here and make me famous when that comes in.
I've been past that half-built building many times in Jeddah, but it is back under construction now, I believe. So we'll see what comes of it.
You send me a photo when you go past it next.
Okay, sounds good. Thanks, Catherine.
And thank you so much, Cam. And Leith, we will reconvene next week for another exciting episode of The Mortgage. The
macro and the mortgage. I love it.
Yeah. Okay. Thank you so much, both of you. And and again, I should do a plug. I keep forgetting to do this every week, but please, if you've got questions and comments, put them in. I will start bringing them up so that we do get to people. If you've got specific questions, or you want to challenge anything that we've said, or you want to share your own experience, I'll pick some of those comments out each week, and we will highlight those as we move forward. Okay.
Cheers.
All done. See you next week.
Thanks, Catherine. Thanks, Lee. Bye.